What to look for when buying a mobile home park. Not all mobile home parks are good investments. Here's how to spot the winners and how to avoid the money pits. Think buying mobile home parks is easy? Well, if you miss these key things, it could really come back and burn you. This is what we're gonna look at. By the end of this video, you're gonna know exactly what to do when buying a mobile home park, what are the key financial things to focus on, and some of the areas you could get burned. So, strong demand. This is the foundation of buying a good mobile home park. Before you even look at the mobile home park, you want to evaluate the area. Location, 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 right? The tried and true saying of good real estate investments. If the area population is declining, be careful. If people are leaving, that's not a good sign for your area. And there's a lot of mobile home parks that are in areas that are declining. So you want to make sure there's good jobs in the area, meaning there's some type of industry. If it's meatpacking, manufacturing, aerospace, colleges, doesn't matter. There has to be some type of employment base in the area so people have jobs. Demographics are destiny when it comes to real estate. So knowing the demographics will dictate the destiny of your asset. Also, services in the area, schools, hospitals, retail, Walmarts, normal larger retail trades like McDonald's or Chipotle, anywhere where people have the services that they can live, means it's a good location that people want to live there and affordable housing's in demand. You'd be surprised. There's so many mobile home parks and one-stop-like towns that have very few services that may not be a good fit for you in the long term because the area is declining. Next is cost of housing. I own parks in Toledo, Ohio, and a single family house at the time cost $150,000 or $100,000, sometimes even less than that. It's hard to make money in mobile homes when a single family home trades for the same price as a mobile home. So you want to find areas where the housing costs are higher or the apartment rents are higher. If someone can buy or rent a home and it's comparable to the mobile home, they're probably going to choose that single family home. So focus on areas where the cost of housing is $250,000, $350,000 plus. If housing is less than $100,000, it's probably not a good market that you want to be in for mobile home park investing. City utilities versus public utilities. Believe it or not, sometimes you buy utility systems when you buy mobile home parks. In a lot of areas around the country where mobile home parks were developed, there was no city infrastructure. That means the mobile home park developer had to put in a well and septic systems or even sewer treatment plants. There's nothing wrong with these, yet these are factors that could be ticking time bombs, and a lot of this infrastructure is 30, 40, 50 years old. These things can come back to bite you. If you can find a mobile home park that has city utilities, that alleviates all that risk on your shoulders, and that's what we focus on myself as investors. What are the current rents and what are the potential rents that you can charge in the community? Just like any real estate investment, it's all about what is the rent growth. And with mobile home parks, many times a lot of the rents weren't raised over the period of time where the owner owned it. So their rents are half or maybe a third of what they should be out in the market. Now you can't raise all the rents at once because that's going to be too much of a burden to the tenant. Plus there's regulatory laws around raising rents in certain states. So be careful there. Yet, if you make the improvements by cleaning up the community, then raising the rent is the natural thing to do to provide quality of housing and pay you as the investor for making those improvements. So look for rent growth. This is the number one thing we look for when buying a good mobile home community because that's going to increase the return to yourself and to your investors. When you're looking at raising the rents, you also want to look at how many vacant lots are there. You want to fill the occupancy. This is what you can do to improve the value of your mobile home community. Yet you don't want to buy an empty community. That is a heck of a big job to go in there and buy 100 mobile homes, sell them to tenants, and fill up the mobile home park. I do not suggest that for your first mobile home park deal. I suggest finding less than 20 or 30% vacancy, and then you can find out, is there a good market to be able to sell these mobile homes? In my experience, if you're in a housing market that has homes over $250,000 as a single family home, these are great markets to sell mobile homes in mobile home parks. And for us, we buy homes between $50,000 and $100,000 each and then install them in each of these lots, and we're able to make a $30,000, $40,000, $50,000 profit every time we sell a home to a new tenant, which helps us recoup our investment, but more importantly, it helps us actually increase the value of the property because now you have another renter paying. If there is vacancy in the property, that is potential for upside, but knowing there is a cost and there is a lot of time involved with filling that vacancy. A simple test of what to look for when buying a mobile home park is, would I want a family member to live there? If I don't feel comfortable with my aunt or my mother living there, then I wouldn't really want to own that mobile home park. I want quality communities that are safe, affordable, clean. Now, they might not look that way when you buy them, but if the entire community is a war zone, that is not a good investment to start out with. So use common sense. If there's quality residents, and yes, there could be a drug problem. Yes, there could be some challenges with debris and trash. Those things can be cleaned up. But if the majority of the community has no pride of ownership and it's chaos, probably not one you want to look for. And if it is chaos in the mobile home park, it's going to be really hard for you to attract the right new tenants or sell new mobile homes because people do not want to live in that type of environment. The last thing you want to look at is the financials and the expense ratio. Very critical. It's all in the numbers. Obviously, we're doing this for cash flows. We're doing this to be able to provide a good return on investment. So we want to look at what is the consistent collections. We look at the trailing 12 profit and loss statement, meaning 12 months, the previous 12 months of operations, how much money's coming in and how much is being collected by the landlord. Secondly, we're gonna look at the expenses. How much is the expense ratio when you compare it to the income coming in? If the expenses are more than 50 or 60% of the overall revenue coming in, that's a problem because most of the money that's coming in and collected is going out to expenses. So you wanna be able to look at that last piece of it is, where are those expenses going? If the majority of those expenses are going to utilities like water and sewer or trash, or if they're being paid in too many management fees, you can clean that up. We look at reducing the expenses by putting a meter on the water line so that the resident pays their own water bill. That dramatically reduces the water cost. And these are things you need to look for up front. If for some reason you can't do that, then you might not want to buy the mobile home park. Another big expense factor is the property taxes. In a lot of states, whenever a new buyer buys a property, that's the perfect time for the assessor to double your taxes. So be sure to call the tax department and find out, what is my tax bill going to be based on the price that I'm paying for this property? You might as well get it out in the open so you know, is this going to be profitable or not? The last thing is the rent roll. Looking at that rent roll and making sure that the tenant is really in that space and they're really paying, and you go out there and physically check, is that tenant occupying the lot? And if they aren't paying, then it shows that they're delinquent. You want an accurate rent roll to determine if you're buying into a good cash flowing community or not. So now you know what to look for when buying a mobile home park and how to avoid the ticking time bombs. How do you get debt or get the financing? On the next video, click above and you'll see how to get a loan on mobile home parks and what things to look out for so you don't get caught in a loan that you can't get out of or you're paying too much interest.